Hello everyone, for you who wants to join my affiliate ebook program, you can visit my website here on candlestickpriceaction.com. Okay, and you open the website and then go to the menu jobs, and then go to the ebook affiliate. Okay, you click this menu and then you have a form, affiliate registration, that you have to fill. First, your name, last name, username, email and password, and also preferred coupon. This coupon will be your discount for the customer who wants to buy my ebook. Okay, and then you get 20% from this affiliate. Okay, 20% from the price. If my ebook price was $60, then you get 20% of $60. Okay, and then you submit the application. Okay, and that's all you need. And then you have an account on my website, and then you have the affiliate link which you can promote the ebook or sell the ebook. Okay, so thank you everyone. I hope this information helped you in some way, and bye bye. Hello everyone, welcome back to my channel. I wish all of you is always well. So in this video I will get you into the inside of advanced price action ebook that I made. It's almost 1 year to make it complete with the concept, example and the video. So let's go. This is the first page of the ebook, which is the vision. Okay, if you buy this ebook, you have this kind of PDF file. Okay, so let's go in the first. So this is the first page, which is the vision. So you have the vision to become what you want to be. Okay, when the vision is to become a consistently profitable trader, that you means that you have the mission to do. So here was just the brief explanation, and then the mission was starting from the context market. Okay, what is the context market, what the trend, what is the ranging, what is consolidation, and what the relation between trend, ranging and consolidation. And here was the concept, and this is the explanation. Okay, so all of this explanation get into the video link on YouTube, which is still the private link, so it's not publicly, but if you buy this ebook you be able to watch it. Okay, because you get the link here. And then the context market, of course, what is trending, ranging, and then the trend, starting with the trend stage. Okay, what is the identification sign, ranging stage, okay, consolidation stage, example. Okay, momentum, this is about the power and the momentum in advance, which is you get the strong, normal and weak, and momentum is divided into two, loss momentum and gain momentum. Okay, this is the ideas, and this is the explanation. Okay, so what is the strong trend, example here using the candlestick. Okay, so I explain all of this example also. So normal trend, what is this, weak trend, what is this, and then to the momentum we have gain momentum, example, loss momentum, example, and then we move into the technical. So that was the global reading. So if you want to read the EMA and the Bollinger Band, that already on the basic ebook. Okay, so this is the advanced ebook, and here we move to the technical advanced. Technical, which is we talk about reversal, continuation and consolidation. Okay, so reversal divide into two, this continuation. Okay, start from RVBL sell, which is we need a trend, but the trend can be reversed. At least every trend will reverse. Okay, so this is the situation, and this is the example what I mean by this kind of RVBL. Okay, because you have to get the minor trend. Okay, and the concept of RVL buy, which is you have to get the minor downtrend and major uptrend. Most probably this will be work nicely. Okay, example, I explain the example here. And continuation, this is continuation sell. Why is that? Because the major and the minor in align, as I explained with the example and also with the SNR level, Bollinger Band, EMA, and the ratio price. And then here continuation buy on the trend. Okay, that all on the trend. This is on consolidation. On consolidation you get RVBL only because there is no CBB on consolidation. Okay, and then you get into the candlestick pattern, okay, which is the morning star, engulfing, dark cloud cover, piercing, and others, but I only explain 6 here because that is most recognized pattern. Okay, else it's like not so sure because it's like inside bar is like a retracement. Okay, it's not so deep explained here about the inside bar reversal because it's most of the time the retracement. Okay, it's explained on the retracement concept. So here was the candlestick, and the candlestick we have illustration here. You see bullish ID, how bullish it can be formed, morning star, or this kind of engulfing, or this kind of evening star. This is kind of dark cloud cover. Look at this. Okay, but sometimes you have also this kind of morning star without a doji but with a candlestick. Okay, so all of this is like this. Okay, in this 3, in this 2, in this 3, all is this. So you have to understand this. In here, for example, you get expectation buy because you see this hammer, but this hammer could happen bearish here because it was consolidation. That is why the context is very nice, is very important here. And then this is bearish ID. You see shooting star, bearish hammer. Okay, all of the reversal is making this kind of thing and or a doji. Okay, so we started with bullish hammer. I explained bullish hammer here. What is the probability? Okay, the success one is going up, the fail one is going down, and the doji, of course, it's also considered nothing because it can be bullish, it can be weak bearish. Okay, and I explain here one by one. Start from the success bullish hammer possibility, what is the sign, what is a factor, and then the example here, 5 into 6 slide example, and then start how it's failed bullish hammer, what is the sign and the factor, and then the example. Okay, the example is vary, sometimes using 3 candle, 2 candle, so you know why the bullish hammer is making a doji, what is the sign, what is the factor. So here basically we answering the why. Okay, why the bullish hammer making a doji, why the bullish hammer making a bearish one. That is the answer here. Okay, so this is with example. Okay, let's go to the engulfing. Here engulfing, and then here was dark cloud cover. All of the 3 possibility, which is fail, success, and doji, I'm explained here. And also here evening star success, evening star. Okay, if that was fail, this was successful because it's going down in the next 3 candlestick, because evening star need a 3 formation of candle. And how it's possible also become a doji, where is the situation, okay, what is happening. Okay, so I'm explaining all here in the YouTube channel. Okay, here. And okay, this is candlestick, all still kind of evening star, and this is engulfing, starting bearish now. What is bearish? Is a shooting star. I'm sorry, what is engulfing? This is a shooting star in form of 2 candle, And then also piercing. Piercing is basically a bullish reversal pattern, but in 2 candle itself was a bearish hammer. You have to understand this, because here you have probably 2 options. In here you see some kind of piercing that you expect a bullish, but actually in 2 candle it also means a bearish hammer, that it could be down. Okay, so the context in place is there to determine what is the best probability. Okay, so the possibility is up, down, and doji, always like that. Okay, the example is too much here. Okay, because I'm sometimes is very excited to make the example. Okay, so now piercing. Okay, this is still the candlestick. You can go by your own. This is the again the bullish ID illustration, which is the hammer and the shooting star. And now we entering the multi and the single candlestick. Okay, I mean the single candlestick that can be read by multi candle. I mean here was a 5 minutes time frame. So if we move to 1 minute, we know what is forming this kind of hammer. That's I mean, and we can take the best probability in the next 5 candlestick. Okay, and this is along with the example. Okay, and then also still bullish hammer. Y is failed, Y is success, Y is fail, and Y is making a doji here. Okay, let's go. Inverted bullish hammer, and then bearish hammer. Okay, and a shooting star here. You see, start from bearish hammer. Y is bearish hammer is success, Y is fail, Y is making a doji, and now entering the shooting star here. Y is success, Y is failed, and Y is making a doji. Okay, anyway, let's go. And then we entering the concept of pullback, which is also RVBL, because the pullback in the higher time frame was a retracement. Okay, that is why you need some criteria that a doji, whatever the wick, it should be a selling pressure. Okay, if this was a pullback up, a pullback on bullish trend, which is minor uptrend, and against the major downtrend. Okay, so this is example. I made all example, and then RVBL buy also in the same opposite criterias, because it's just vice versa. This is just the opposite. Okay, and then RVBL sell also happening on consolidation. So this is not the concept of pullback, this is consolidation context. Okay, RVBL can happen on pullback, can happen on consolidation. Okay, RVBL buy, and also can happen in the normal trend. Okay, because the normal trend is this 2 candle is looking like consolidation, but if the consolidation, it's mostly not breaking this wick, but in the normal trend is most probably going up. Okay, so it's making another bullish candle, because it's need a retracement of 1 candle mostly, and RVBL sell on the normal trend. Okay, so you connecting the trend that you learned before with this kind of concept. Okay, and then CBB, of course, again with the multi candlestick on the trend. Okay, so the trend mean you need more than 1 candle to read it. Okay, so if you see this kind of bearish hammer, this is should be in 5 candle or in 3 candle, so you can expect the next 3 candle has a pressure or some kind of sign that making this is a strong trend possible. Okay, that is why I'm explain here. I'm explain in the example. Same thing with CBB buy, continuation buy. Here was CBB buy, Y inverted bullish hammer is going up. Okay, I'm explain here. And the doji also, we have gravestone doji, dragonfly doji, and cross doji. Remember, gravestone doji is can be happen on the reversal context, which is RVBL, or also can happen on continuation because the trend is strong. So that is I'm discovering here. So this is the illustration of the probability of this. If you see this candle in your head, it should be this, this, and this. Don't only attach with this, because it kind of making the bias confirmation. when you see this kind of candle and you think only this, that is the bias confirmation mostly attack. Okay, you have to have the option and you have to see what is the movement here. That is why you have to understand what is the 3-minute candle if you want to trade in 1 minute. Okay, or you have in the 5, you trade in 1 minute, it doesn't matter. You have to align within the major and the minor trend. And this is the example that I explained why it's Gravestone Doji becoming a bullish, which is a buying pressure. Okay, and then bearish selling pressure, and also becoming doji. Why is becoming doji also important? Because sometimes we think only pressure up and down, but we forget about the possible of the neutral, which means not go anywhere. Okay, now Dragonfly Doji is the same thing. Why it's success, why it's failed. Okay, making bearish, why it's making doji. And Cross Doji also the same. Let's go, and we go move to the retracement advance. This is like you have to understand that this kind of retracement is like inside bar fake breakout, you see, because you have the pattern like bullish, small bearish like retracement, but at the end is going down. Okay, but yeah, that is to distinguish the retracement and the inside bar, because it's very similar, but it's not. And you have to understand that the retracement is mean this. So this is 2 candle, this is 1 candle made up by 2 candle. You have to understand this. Okay, what is the retracement? This candlestick, which is more likely a bearish hammer or a bullish inverted hammer. Okay, and then the possibility also 3. We not take possibility 1 because by the candle itself it's only 50-50, which is not make anything better. Okay, or if you learn only this candlestick, not the context, you will not be able to become a consistently profitable trader. That's what I'm experiencing. That is why the context is very important. That is why in the beginning we learn about the advanced context. Okay, because the context we need here to make this more reasonable. Okay, and then this is bullish retracement, why it's failed, why it's making a doji, why it's success. And here also bearish retracement, which is the bullish was the candle. Okay, and why it's success, why it's failed, and why it's making doji. All I explain here in the link of YouTube video in the upper right corner. Okay, and then move to the rejection. Okay, you probably heard about this. This is the idea and this is the illustration. Okay, what do you mean reject? Reject means denying something to enter. That means if the bullish inverted hammer happen, the rejection means a reversal. Okay, which has to happen on consolidation. Okay, look at this example. And rejection was selling pressure. That means it's a trend happening. So the example. Okay, and also the opposite for the bullish hammer and the bearish hammer, it can be rejected. Because we talk about the rejection, that means where is the weak, that was the reject. I mean it's reject up and you going up. Okay, but you have to understand the context, because else it probably going down. That is why you have to understand what is the rejection here. Most of the time the context will give you a sign. Okay, look at this. Okay, look at this. And this kind of rejection is sometimes happen in ranging or trending. Okay, because the rejection is leaving the axis, which is leaving the consolidation and starting a new trend. Okay, so the closing price, I'm also covering the closing price, which is, you see the illustration, closing above the level, which is the candle bearish. This is the SNR level, at the level below the level, all this kind of type is explained here. Okay, close the level, why it's reversal, okay, why it's continuation, and why it's making a doji. Because closing above the level, it's mean those three things. Okay, depends on the candlestick, you have to understand that. And this is all about the closing price. Okay, below the level, why it reverse, why it's continue. Okay, and then let's go closing price. Okay, entry point. Okay, I'm also talk about the entry point, why it's so crucial. Now the entry point illustration. Entry point with pressure, with no pressure. When with pressure, you can enter only below the closing price of previous candle or above the closing price of previous candle, depends on the trend. Okay, but with no pressure, you have to get the SNR. You not enough entry just below the opening or above the closing price of previous candle, because no pressure means more ranging. If with pressure, that means a trend. So you will get this in the example. Look at this. Okay, so entry point, wicks. Okay, I'm also explain about wicks. Wicks, there is upper wick, lower wick for the buying pressure, and also upper wick for the lower wick for the selling pressure. Look at this illustration. Okay, the candle itself, the wicks was 50-50. It's depending on the context. So this is the explanation why the buying pressure is happening. That is the wick. Okay, so the bullish candle selling pressure. This is more related with the pressure, but anyway, you will get a double confirmation if learning this again. Okay, and the doji, it's also mean buying pressure, it's mean selling pressure. It doesn't matter what is the wick, upper wicks, lower wicks, is both have the same probability, depends on the context. Okay, the wicks and the opposite force. Okay, so I think nobody talking, but maybe few of the trader talking about the opposite force. What is the opposite force? When you see the shooting star was failed, that was the opposite force may involve, or it may stay in a doji. Okay, but the focus here was the pressure. Okay, and this is the criteria, the example, why the failed selling pressure. Okay, the fail of buying pressure, that means the opposite force is involved. Okay, and then continue to the stall concept. This is the ideas of the reversal, which is like this. You have to understand here, you have major and you have minor uptrend, which is against the major, and you enter follow the major because you see the stall. And remember, the stall is the involving the consolidation. Okay, else it will be not a stall. Okay, or need the axis to be understood. That is why you need the axis concept. And then after the stall, we have the space bump, which is some space to break, some space to reject. Okay, and I'm explaining here why the space bump could be the break. You know, the space bump is the space or the wick on the small wick on the candle, but the ideal wick. It's not too long, it's not too short. Okay, but it's ideal to break. Mostly here will be this significant ratio. You will understand that on the example here. Okay, but the space bump is not for only the break, the space bump is also for the reject if we on the different context. Okay, that is why it's not the space bump is a breakout. That is why the breakout is not often happen. Mostly sometimes it's reverse. That is why the space bump is to reject. And then the ratio interaction. So this is, no one is talking about this ratio interaction. I think in the YouTube only me it's doing this ratio interaction. This is also explained on the basic advanced ebook. Okay, and respected and unrespected level. You have to know what is the respected and unrespected level. All is the confirm level, which is respected, it's touched by the wick, unrespected, it's touched by the body. That is I'm explained here, and what happened on those level you have to understand, because it happened a breakout, it happens a consolidation. Okay, this is the illustration. Okay, this is why the unrespected level C, you can see, look at this. When you see this kind of dark cloud cover, something like that, or this kind of doji or anything, it's just a fake breakout form. Okay, that is unrespected level. And the axis, okay, this is very important because all of you is looking for candlestick pattern. Candlestick pattern is work with the axis. All of my example is involving the axis. No one is not involving the axis. Okay, because it's work with candlestick pattern. That is the problem. The candlestick pattern is working with the axis. That is why the engulfing is work, dark cloud cover is work, piercing line is work. It's because of the axis. So the axis, it could be 1, it could be 2. Okay, that means you have trap in 2 significant level, or it's very nice 1 significant level that's make a doji. Look at this here. It can make like this, that means it's become the axis on itself. Okay, if they make 2, that means they trap in between. Okay, you will understand that. And this is the advanced, a little bit understanding the part, which is I gave the example here with the significant candle, which is the shooting star. But actually it worked with all of the opposite of the shooting star, which is the hammer. Okay, bullish hammer, inverted bullish hammer, bearish hammer. Okay, and here the illustration why it should work, why it do not work. Look at this, do not work on consolidation context. Yes, because you expect this or this is becoming a trend. So a trend is not on consolidation. If this was consolidation context, it will be bearish, it's not going up. Okay, so that is why you need a trend. You need a trend. And if you are in a ranging, it's also possible. Okay, but do not work on consolidation. It works on trend or on ranging. This is the illustration of ranging movement. Okay, and this is the few example that I'm explain also with the link on the right upper corner YouTube channel, private link. Okay, and this is the concept of a cross time frame, which is, I think no one is talking about this, but this is very important, because if you know the shooting star in 3 minutes movement, then in the 1 minute you get more higher probability to profit. Okay, because you know the situation. Yes, this is just like making your own candle. It's like it's boring to wait that you have to make your own candle to understand the market. For example, this bullish hammer, I can make this by 3 candle, by 4 candle, by 5 candle, depends on the data that's showing on the candlestick pattern. Okay, because this bullish hammer could be this bullish, could be this doji resulting, could be this bearish, which is consolidation, which is trend. Okay, you have to understand that. And also for the shooting star, it's always like that. So this is the example. Okay, and also for the opposite, which is the hammer is the opposite, the hammer is also inverted bullish hammer. Okay, and also the bearish hammer. Okay, because the inverted bullish hammer is the opposite of the bearish hammer. This is on the uptrend, this is only on the downtrend. All of this have possible probability to make doji, to make bearish, to make bearish, to make bullish and bullish. Okay, here it should be yes, this was bullish. Okay, anyway, this is the example. Okay, and then mission completed. Okay, so that was it. The last is the across time frame, so you make up your own candlestick. Okay, and all the candlestick has the possibility. Remember, all candlestick shooting star has a possibility to become consolidation, which make a doji, or to become in a trend. For example, this shooting star, this shooting star, this shooting star. So you have to understand where this shooting star is happening, what is the situation that is making the probability is much higher to get profit. Okay, so that's all. After I am finishing this ebook, what I can get, you can get a consistency profitable trader. Here now, right now, I'm working on mission 5. Mission 5 is profitable. You see, 57% of the profit power. Here 64% profit. This is weekly. Okay, I'm recording the data of weekly, 70%, and week 1 57%. So this is nearly 60%. What I mean by consistently profitable trader is you never 100% profit. There is a loss, but you can manage the profit. That's the most important things. Okay, and anyway, there is the proof on my YouTube channel already. You can watch it week 1 until week 3 and the previous mission. Okay, you have to have your own mission. Okay, anyway, this is all $60 if you want to buy it, and you can boost your skill in trading if you want or interested with some kind of price action technical analysis. Okay, and also if you not want to become a trader, you can still join my affiliate ebook below the link on the description. You register on my website and you can promote or selling my ebook, and you get 20% of this kind of selling. Okay, so anyway, I hope this information is help you in some way in to become a trader or to become a marketing. Okay, anyway, it works for everybody, and at the last I see thank you for supporting my journey, and bye bye.